Interest rates have really made headlines over the last year and a half, and as we know, they play a huge role in your finances. With the fluctuations in rates, we have Pfanstiel here with Axias Wealth Advisors to break it down for us. And I think what's been so hard about it is it seems to change every day or every couple of weeks. We're hearing something else about this.
Yeah, interest rates are volatile, and they are expected to somewhat stay volatile, and it's tough to make decisions around that.
So let's talk about, at the very core, why interest rates are so big when they come with a big purchase, like a house or a car.
Yeah, so when someone's a cash buyer, these things may not necessarily matter. But like you said, a big purchase, a lot of folks can't afford to be a cash buyer. So what they have to do is come up with some sort of an installment or a financing arrangement. And outside of the price of what you buy, the biggest determinant are going to be the time period over which you get to make those payments and the interest charged.
Right.
So if interest rates are going up, your month-to-month ability to make the payments on those items are getting tougher and tougher, and it affects every other decision that month.
And I have to imagine you've heard from some of your clients too, how hard this has been, because we know that the cost of cars has gone up, vehicles, and the cost of homes too has gone up.
Absolutely, and that's part of why interest rates are even up in the first place.
Right.
Right? The Federal Reserve is trying to stop people from bidding on the prices of cars and homes, and stop businesses from bidding on those so high as they try to address inflation. So interest rates are up in a lot of ways to dissuade those purchases, and really until that's happened, it'll be tough to envision the prices of everything normalizing around the rest of the economy.
I'm sure you eat, sleep, breathe this kind of information. I just saw the other day there was some good news about inflation coming down a little bit, but is that going to impact interest rates in the near future?
It's tough to say in the near future, but good news is a step in the right direction. More good news with reinforced good news and some consistency would certainly allow the Fed to take comfort in starting to shrink interest rates and giving us a little bit easier of a time with some of these big purchases.
Chris, one of the things that I recently read too was about how we may have a new baseline for normal. We probably aren't going back to the 2% interest rates that we saw in the pandemic, but our new baseline, because consumers are not slowing down, may be a 5, maybe 5%.
I think that is a true baseline. I really do. If you look at some charts, I like to Google the St. Louis Fed's chart, and it goes back 50, 60 years. Mm-hmm. You'll see where rates were 18, 19%. And
right.
No one went through that and said, boy, that's the new normal. I hope I get 14 forever.
Right.
And just the same, a 2 or a 1 or a 2.2 for a mortgage might be truly historically almost as extreme as some of those really high double-digit ones. And somewhere in the 5s, if you just go back 30, 40, 50 years, that's kind of a normal spot on a curve.
Yeah.
It's just tough because we went from very, very low to a little bit over average in the snap of our fingers.
And it can really impact your monthly payments.
Certainly.
We talk a lot about the bad, but there's also some good to what we're seeing right now, and that comes with savings accounts. So is there a best thing to be doing?
It's tough.
Yeah.
Everyone's a little bit different. But yeah, when interest rates are up, it's great to be a saver. It's great to not be a spender, but rather be a saver, where you're seeing certificates of deposits in the 5, 5.5, 5.9 even, we've seen some clients get. And then we've seen products like MIGAs, or it's an acronym for multiple year guaranteed annuity, which feels like a CD type account, but those contracts, we're also seeing those in the mid-5s with guarantees for 3, 5, whatever it might be, years. So it's a great time to have money on the sideline, and rather than settling for the 1% or less that we grew accustomed to through the pandemic, to go get 5%. That's a nice reward for being a saver.
It really is. What about if you need to buy a car, you need to buy a home, you need to make these decisions for your family? Maybe now isn't the best time with interest rates, but is there a competitiveness to trying to find these loans?
So there can be. A lot of times, if you have a strong relationship with a credit union or relationship type lending institution, you can get a little bit of nice treatment. But typically what we're seeing folks do is sometimes buy cash if they can, other times do bigger down payments.
Okay.
Certainly ahead of those purchases, if we have any warning, it's not the car died yesterday and need a new one tomorrow, but if we have any warning, making sure our credit looks nice, our debt to income ratios look nice, because at least in the tier that we're in for all the different interest rates, if we're considered one of the least risky borrowers, we might get a little bit better of a rate than our neighbor or our friend or our sibling or something like that.
Really great information, Chris. Thank you so much.
My pleasure.
All right. To learn more about Axias Wealth Advisors and find out how they can help you achieve financial success, you can head to our website, kdka.com/talkpittsburgh for more information. Now we're checking in with Felicia Woody about tonight's forecast. Hey, Felicia.
Hey there. So the big thing is that we're tracking rain for tomorrow, and this is the first time we've seen rain in over a week. Will this impact your Friday night plans, including maybe some light up nights? I'll let you know.
All right, we'll be right back.